You are listening to chartingwealth.com for Wednesday, the 15th of August, 2018. Please order our book, Charting Your Way to Wealth, if you don't already have it and want to know what it is we do here on the channel every day. We've got lots of good training videos on the channel. Our book brings it all together for you with both of our trading ways, explanations as to the type of indicators we use and why, the Hakken Ashi candlesticks, you name it. It's all in the book, and we thank everyone who has ordered it and supported us in the past, along with ordering the Trader Journals. We do have a special training we're going to be sharing with you around the 15th of this month, so that's just a couple of days away. We will be putting that out to the folks who've purchased the book. So if you've not purchased one yet, here's the impetus to get that going. We do gather your email list when you buy the book, and we have all those special trainings that go out to the book purchasers, the folks who help us be able to pay for all the work that we do here at the channel for you free every day. God bless, my friends. Let's jump right into this market. We see that stocks are up for the day, bonds are down, gold is up. What do we see, though, on the S&P 500? The week is starting off looking quite weak after 2 days into a 5-day candle. We have a red spinning top. Now, it's not a solid red down candle yet. We do see that the derivative oscillators continuing to move up. Price percent oscillators heading up on that weekly chart. But it's a sad cry from the 5 prior candles of nice up movement. Is the market topping out? Don't know yet, but we are watching things. We see that as far as what's happened lately, it has topped out. It topped out actually on the 2-day candle ending the 8th of August. And then the one ending the 10th of August was a red spinning top, which means indecision tending down. And of course, what happened next? We had a down candle. That's the latest one that has formed. It's a red down candle resting right there on the 2-day trend line. And what we see is price movement still right there at the 2-day trend line above the weekly. We see that the 2-day price percent oscillators heading down. Derivative oscillators been losing energy since the derivative oscillator peaked out on the 25th of July. So we see that even though the market went a little higher, the oscillation of price movement has continued to move down on that derivative oscillator. So we're just continuing to keep our powder dry and watch. What do we see on the 4-hour chart? Well, of course, it crossed over going down back in the morning on Friday the 10th. Actually looks like it bottomed out, at least for the short period, up some in the morning and more in the afternoon on Tuesday. Derivative oscillators losing downward momentum. Price percent oscillators pretty much flat. And again, that price movement bouncing off the 2-day trend line. So we'll continue to keep our eye on things and see what we see. If indeed price movement keeps going on that 4-hour, remember that if it crosses over going up, the weekly and the 2-day are still in confirmed up moves. So keep your eye on things. If it's a big up morning, might give you a jumping in point in the afternoon. We'll continue to watch things. We go from the S&P 500 to QQQ, which is, of course, the NASDAQ 100. We see that we're going into a second week of up movement after 2 red candles in the prior weeks ending the 27th of July and the 3rd of August. And so far we have a green up candle. Derivative oscillator gained a little bit of momentum so far this week. Price percent oscillator, however, is pretty flat. We look at the 2-day chart and what do we see? Well, that 2-day chart is just sort of back and forth. It's hard to make a call on it. Back and forth on that red signal line. Derivative oscillator still in the negative, but it's been losing some of that downward momentum. This latest candle is a red spinning top. Means indecision, of course, tending down, and the derivative oscillator still negative. So as far as the 2-day chart goes, it's telling us to look for things to go down. Very, very strange how it's just sort of meandering along the red signal line. We're going to have to wait and see what it actually does. Hard to make a call there. We look at the 4-hour chart. We see that up in the morning, up a little in the afternoon. Derivative oscillator, however, still quite negative. If we see things flip over and we have a nice strong movement over going up on that 4-hour trend line, since the weekly's already up and the 2-day is a little bit sketchy, if things pull over and strongly start moving up on the 4-hour, I would encourage you to practice trade that on an uptrend. Can't do it on a downtrend because the weekly's still in an up move. So keep your eye on things, particularly if that 2-day and 4-hour rotate over going up at the same time. You might give that a practice trade. Note that in your trader's journal as to how it worked for you with the time of year, of course. Make sure to pay attention to that. It might give you some hints next year if you see a similar pattern. Now, we encourage you to fill out your trade worksheets, your daily market worksheets, your weekly market worksheet once a week. Those are all available free in the show notes, along with links to buy our book. But those trade worksheets, daily market and weekly market worksheets, all available for free, plus all of our videos. Okay, let's keep moving through these charts. Going from stocks to bonds. On the weekly, bonds down 0.22%. Now again, bonds had been down 3 prior weeks, ending the week ending the 3rd of August, and then a green spinning top the following week ending the 10th. Derivative oscillator is still negative, and so far this week we have a green up candle, but the derivative oscillator still quite negative. Price percent oscillators heading up, so technically we're still in a confirmed up move on the weekly chart, but it's really not much of a strong move at all. Guess we can redraw our, if you call that much of a trend line, it's pretty much flat. Doesn't give you much help there at all. But we go from the weekly to the 2-day. We see the 2-day is still negative, and we're just waiting to see what the 2-day is going to end up doing for us. Derivative oscillators losing downward momentum. Price percent oscillator appears to be headed up. We're going into the second green up candle, but again, we'll continue to watch. If there is a crossover going up, then of course that might mean that bonds have bottomed and might give us, again, the possibility for some up moves in the future. We go from the 2-day to the 4-hour, and of course the 4-hour rotated over going up back in the morning on the 3rd of August, went up for about another half day and then down for a couple of days, and has been bounding up since the morning of Thursday the 9th until it peaked out on the afternoon of Friday the 10th, and then sort of sliding sideways. At this point, tending down, derivative oscillator losing momentum. Price percent oscillator is pretty much flat, maybe, pretty much flat. So again, until we see something shake out in these charts for us on TLT, we don't have a move. We'll just keep watching and charting. And again, remember, we're trend followers. So we want to have an established trend on that weekly and the 2-day. Wait for a rollback in the opposite direction on the 4-hour, and once it crosses back over, we jump in. And of course, we have our other method of trading, which are those weekly vertical crossovers, both explained in the books, and we talk about them all the time here. Haven't had a weekly vertical crossover recently, but again, folks, we're leaving the summer doldrums soon, going into the fall-winter trading zone. I hope you're getting excited, because I sure am. Okay, going from the bonds to gold and the 4-hour to the weekly chart, what do we see with gold? Well, gold has been trundling down quite strongly since it really started hammering down with red candles all the way back on the week ending the 27th of April. But for 3 up weeks, been going down strongly. This is one of the stronger weeks so far as the Heikin-Ashi candlestick goes. Derivative oscillators about flat as per the prior week. Price percent oscillator continuing to head down. Gold was up a little bit for the day, 0.10% on that 2-day chart. We see nonetheless a strong down candle. Price percent oscillator kicked over going down, and the derivative oscillator went from green to red. And as we go from the 2-day to the 4-hour, what do we see? Well, of course, the 4-hour chart up a little in the morning, down in the afternoon. Now, these are Heikin-Ashi candlesticks. So, again, want to monitor things right there around the 113 mark and see if indeed that's going to be a bottom or if things are going to keep going down as far as what the indicators are telling us. Price percent oscillator gaining downward momentum. The derivative oscillator heading down. So that's still looking quite decent. So keep your eye on that 4-hour chart for further down movement in gold. Again, price movement well below the weekly and the 2-day. Both of those charts are continuing to hammer down, and one would expect, all things being equal, the markets tend to move in the direction of the largest chart, which is the weekly. Everything's set up for continued down move. Let's check one thing before we wrap stuff up. We're going to look at our 2-day chart, and we're going to see if we have any prior resist or support for down moves. I guess we can go all the way back to where things hit around that time back in February of 2017, trying to see if we have anything really further. No, not really. So we'll see. I mean, things have already sort of blown through that 114.80 mark down again to the 113 or so, and we only have one spot where there was a little bit of support. So we'll just keep watching. And again, don't see any strong support there for things to bounce off that. And we'll just keep watching and seeing what we see and how long this down move in gold will run. That's where we are, folks, as we end the day on Tuesday and go into Wednesday, the 15th of August. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.